Hello and good morning. Welcome to the early trades here on Kalkine TV. This is our market open report. Today the S&P ASX 200 is up, gaining 1.19%, and the top performing stocks on the ASX include Megaport, which has risen 7.25%, and Imugene, which is up 6.06%. Over the past week, the index has gained 1.88%, but is still down at 3.32% for the year-to-date period. And looking at some of the stocks making a buzz today, Warley has announced that its earnings have continued to be adversely impacted by extraordinary rainfall, particularly in New South Wales and Queensland. And further increases in energy prices since the trading update provided on the 22nd of March. Now, after taking into account trading for late March through mid-May, which has been impacted by the rainfall, as well as inflationary cost pressures, the company expects additional adverse impacts to underlying earnings in the financial year 22 of $45 million. Its transformational program is as well expected to deliver a benefit of $45 to $50 million in the current financial year, compared to its target range of $60 to $75. And also in the news, Warley announced today that it's been awarded a 3-year engineering and procurement services contract by Shell Offshore to support 5 of its assets in the Gulf of Mexico, USA. This contract will support Shell's transition to a digitized and more efficient project delivery model for the maintenance of offshore assets as a part of the company's work to continue lowering the carbon intensity of its Gulf of Mexico portfolio, which is already among the lowest in the world. Now, this contract also is for the future support of the Shell Whale deepwater development in that region. And in other news, Monash IVF Group today announced entry into a binding sale agreement for the acquisition of Pivot Medical Centre, which is a Perth, Western Australia and Cairns, Queensland provider of fertility services. Monash IVF is acquiring Pivot by way of an asset sale and purchase for initial upfront cash consideration of $9.4 million on a debt-free basis. That's with the potential of additional earn-out payments over a 1 to 2 year period from completion. The acquisition is expected to be funded through Monash's operating cash flows and or debt facilities available. And meanwhile, Eagers Automotive has provided an update on its year-to-date trading performance and outlook for the financial results for the half year ending June 30. The underlying performance of the business continues to benefit from a strong market where demand for new vehicles continues to materially exceed supply. The company also anticipates a reduction in the number of new vehicles delivered to customers in the first half of 2022, and it's expected to impact its half-yearly financial performance. Eagers attributed the issue to multiple global events, particularly the ongoing effects of semiconductor shortages in the industry and the compounded issue of the Ukraine conflict, as well as China's COVID lockdowns. Well, that is a wrap on the early trades, but tune in for more only on Kalkine TV. I'm Holly Shields, signing off.